Welcome to Market Movers, where we identify market-moving headlines and discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin.
Hi, Jim.
Well, Scott, the biggest headline this week, the ever-changing data that's coming out regarding the pandemic, stimulus talked about by the government, or the kickoff of earnings season next week.
Well, they're all three related, Jim, and one kind of leads to the other, which leads to the other, frankly. But right now, I believe the market continues to be focused on stimulus from DC and stimulus from the Federal Reserve as it relates to what we're seeing out of the pandemic numbers. And certainly, I believe, what we're going to see out of earnings season, because as the pandemic numbers maybe get a little worse again, as earnings season maybe comes in a little disappointing, that's when I believe the government and the Federal Reserve start to step in and talk about more stimulating.
Sets up the first question. Gold exploded higher, which I think this is one of the biggest stories out there. What's that telling us? Is that saying that somewhere in the future there's limitations to Fed and government policy?
I believe the contrary. I think it means that there is almost unlimited potential as to what the Fed and government are willing to provide, therefore lifting gold and lifting some of those safe haven assets, if you will. And we've talked about gold and the GC contract on Market Movers for months now, Jim, because of all that liquidity that's being driven into the system. So in my opinion, as an owner of gold and GC, I like to see some of these more talks of stimulating coming down the road, because I think that continues to support the precious metal here.
Okay, CME has a gold contract, silver contract. They have micros in both, weekly and monthly liquid options in both as well. On to stocks now. Stocks for the last probably about 6 weeks have been in a fairly tight range as they balance the stimulus versus the economic condition. What kind of news could we see that pushes them out of the range to all-time highs?
Well, a better than expected earnings season coming up could definitely do it, because the market has been worried about, say, future earnings in the near term, meaning in the next couple quarters. So some good earnings reports for Q2 would be great. And I think even better would be some decent guidance from the companies reporting. However, I don't exactly expect that. So the market could hang out around these levels here, but any better than expected news could certainly push the ES and the NQs higher.
Okay, so we have the four equity products, the minis in S&P, NASDAQ, Dow, and Russell. Minis and micros, extremely liquid options contracts, weeklies, and monthlies and quarterlies. Back to earnings season again. As we look at it from here, is it tech week and then everything else as far as order of importance is gone?
Has to be, because tech has been leading us really throughout this whole pandemic trade. I mean, even on the downside, tech outperformed, and it's performed very well as we've bounced back to the upside. So tech continues to be that bellwether. And I have gone over this before in prior shows about how the NQs are the indexes and the ones I really watch when it comes to the leadership in this market. So as we watch tech, as we watch how it affects the NQs, that's where I believe you can get your keys from as an investor or trader.
Real quickly, if earnings season's good, could it force 10-year rates higher, or are we stuck with a flat curve?
Nope, because the Fed is controlling, it looks like, all facets of the yield curve. I do believe the Fed wants to steepen the curve a bit, so the 10-year may move as it relates to, say, the shorter end, the fives and lower, but I don't see much happening on the 10-year note as far as yield goes through the end of the year.
Okay, the 10-year, the CME, one of their marquee products is the 10-year futures contract, which has extremely liquid futures contract and weekly, monthly, and quarterly options. Thank you for joining us on Market Movers, where we are helping to make you a better trader.